And now the Federal Reserve is just kind of sitting tight because there are concerns that tariffs may spike inflation, and the Federal Reserve wants to be able to react if and when it does. Now, we know this. You may not care at all about the growing spat between these two guys, Trump and Powell, but it does matter to your money. So let's talk about it. Ed Yardeni is the president of Yardeni Research, and Matt Orton is chief market strategist at Raymond James Investment Management. Ed, sort of political and ego battle aside, this does, I think, seem to matter for the markets and our viewers and listeners' money, does it not? Because maybe Powell, while saying he's apolitical, how do you avoid, I mean, I don't know how as a human being you avoid this kind of presidential pressure.
Well, look, this we've seen this movie before. It happened during Trump 1.0 that the president came after the Fed chair, and the Fed chair stuck to his guns, didn't resign, and remained with us through today. And I think if Trump continues to ask him to resign, he's not going to accept. He's a big believer in the independence of the Fed. I think most economists agree that the Fed should be independent, should be not be swayed by political pressures.
I think, Ed,
I don't think he knows.
Ed, I think you nailed it. I'll go back to you really quickly because let's just talk as just human beings here. The Fed, if Trump says, "Oh, if I ask him to resign, he will," he won't. I don't think he would. I think you're exactly right. And in part, maybe the way to, because if you ask somebody to resign, they're going to say no because they don't want to seem like they're bowing to your pressure. Maybe the way to get Powell to quit would be to nominate him for another term, because Powell is going to become a very, very rich person once he leaves office.
Well, he was a very rich person when he came into office. Yeah, he'd be richer. But look, I think he's a dedicated public servant for the United States. He's done I think on balance, he's done a very good job. He's shown flexibility. Look, if he was replaced today, there's still 18 other people on the Federal Open Market Committee. So I mean, if Trump got exactly what he wants, he could also get 18 dissenters, which would make it impossible for the new Fed chair to get anything done, and certainly wouldn't bow down to to President Trump. Yeah. So his problem isn't really Powell; it's the independence of the Fed.
Yeah, and Matt and Ed, your job and sort of our job in a way is to look forward, not backward. And Jay Powell has 1 year left in his term, 9 meetings. There will be a new Fed chair come next May, and my sources will say that the search has already begun or beginning right now. Donald Trump is going to get the Fed chair that he wants. He's going to get somebody that wants lower rates likely next year. So, Matt, as a strategist, how do you, this spat aside, 12 months from now, things could look very different. How do you plan for then? What type of recommendations do you make to your clients?
Yeah, Brian, that's a great question, and that's what we try and get a lot of our clients to focus on right now, is that it's easy to get caught up in the chaos that you see in the market right now. But when you look forward for 12 months, the big question is really, how are tariffs going to impact earnings? How are interest rates potentially going to impact earnings going forward? And there's a lot of parts of this market that clients can lean into, such as financials. So even looking at gold as a diversifier for portfolios, there's areas of technology that are not really circulated around what's happening between Trump and Jay Powell. It's looking at long-term secular growth trends, and it's picking your spots. How do you want to tactically lean into what you think is going to work, where you think there's an acceleration in earnings growth going forward? And so when I look at the market right now, it's picking up some of the pieces that were thrown out with the bathwater, like cybersecurity within the technology space, looking at some of the big banks that have reported pretty good earnings on balance, and where a lot of those M&A pipelines that we were expecting to come through, they're delayed, not derailed. So there's still an opportunity for earnings acceleration going forward in the back part of this year. And you've got a lot of much more attractive valuations right now than you had 3 weeks ago.